Hello, hello. It is 7:48 p.m. Monday, November 7th, here for the post-market session recap and review. Starting with the economic calendar, as mentioned in the pre-market analysis video, there was no data coming out for today's session. Absolutely no data. So we were expecting a quiet day and potentially a continuation from last Friday's sentiment. And we did see that as the VIX rejected previous structure levels and had some weakness during the day. The S&P 500 equities printed new highs and retested and respected previous 1-hour structure on the dot. And we had a continued optimistic sentiment throughout the New York session. On dollar, we were playing this same sentiment as we broke below the significant prior lows that led into these new higher highs. We finally broke to the downside and we maintained below, and we continued with the weak sentiment as we talked about in the pre-session analysis. All right, so on gold, we were looking at obviously we're looking at the higher time frame is bearish, but the short-term bias was bullish based on all these factors. DXY weakness, strong sell-off last Friday, continuation of the sentiment overnight with fresh lower lows over the London session. Equities showing support at key structure levels, starting to print new intraday highs. The VIX maintaining bearish structure points. Overall optimistic investor sentiment is holding. So the market structure on gold is respecting higher time frame market structure below 1681. However, it is heavily bullish on the 4-hour and the 1-hour with strong momentum candles. Fresh new 1-hour higher high in the London session give us the 4-hour and the 1-hour market structure bullish confluence. However, we are below major sell side liquidity zone. So for these reasons here, we're looking for short-term buys because the sentiment is optimistic. We are playing the short-term dollar weakness, but it is against the overall higher time frame trend, and we are still below this higher time frame sell side liquidity zone. So this was the trade idea that I executed on today. Trade idea 1, bullish 1-hour break of structure retest around 1672, 1673. We had the fresh 1-hour higher high break of structure in the London session. We had 4-hour printed fresh highs after failing break the 1620 lows. So we had the 4-hour and the 1-hour confluence. DXY, we talked about this holding intraday bear structure. Equities hold strength over the day, and we get the retest on the dot here, and then straight to that key level and rejected for the rest of the day. But we did have an opportunity to take advantage, and let me zoom into the 1-minute time frame and show you the price action on gold throughout this session here. So just a recap of the structure. We right around this level here, this was the FOMC sell-off, and we printed these new low. Well, we actually retested the lows, failed to break, and then on Friday we had some major buying and full correction of the whole entire FOMC move, and actually breaking into new higher highs, testing this weekly break of structure 1681. So we had the 4-hour flip to bullish market structure with these impulsive new higher highs. Over the Asian session, we saw some liquidity generate from this pullback, a new lower low, but then buyers stepped in and grabbed that liquidity and pushed us into new higher highs on the 1-hour, thus creating this 1-hour break of structure. Now we have the 4-hour printing new higher highs, and then after this pullback, we have this 1-hour print new higher high. So this is what I mean by the 4-hour and 1-hour market structure bullish confluence. Now, given that information, we had all the confirms to be looking for buys near that this liquidity zone around, again, the 1672, 1673 region. So now on the 1-minute time frame, looking at price and waiting for price to hit my area of interest. I'm not looking to buy near this zone. Here we go. Okay. So let's pause right here. I paused a little bit late, but All right, so we did tap into this liquidity zone. So at this point, once you have this bullish engulfing candle, we're starting to get confirmations of 1 minute rejection candles, right? So now this green box, a rectangle, is a 1 minute rejection zone. So this right here, after this candle, I have a limit order set, right? About a 15 pip stop and targeting these highs here. Right, so I had a limit order set here, but we never got to retest it. Instead, we just continued on our way up, fully correcting this this last bearish move down, thus completing an ABC pattern. Now, an ABC pattern for me, when we retest, is the A is a weak resistance attempt into our higher time frame or area of interest. So weak sellers. Liquidity grab is point B, and then C is buyers take over, printing new higher highs, breaking structure here. So given that we didn't have the precise entry at the 1 minute, do have this liquidity zone now to play to the upside here. Now, usually the ABC pattern is great to take an entry right at the retest of the at the zone, and then your stop loss is beyond, and you're usually looking for a I'm usually looking for a more swing setup, but because we're looking for short-term buys only, and because the range is small, I'm only looking for 1681, so that's about 40 pips from here. I'm not looking to have my stop loss so big. So what I adapted to today is waiting for further confirmations here of a double bottom that I could have, again, a 1 minute rejection zone created above this ABC, and thus have a smaller stop loss and a good enough risk reward to be taking this range to the upside here. So we had our first initial reaction right here, this showing buyers rejecting this ABC liquidity zone and creating a nice potential double bottom setup for the impulsive new higher high, higher low continuation. And now here, this becomes my new entry point around 1677, 1676.6 area with a small stop loss, because we're looking just for a nice scalp opportunity. And if this zone is not going to hold, I don't want to hold it for the double bottom here. I'd much rather potentially enter manually if we come all the way back down here. But a small stop, even if you're keeping a 15 pip stop to be extremely safe, you still have a nice 2-to-1 plus to our next zone here. So this is exactly where I set my order, and I got triggered right here, and saw that the level held, and we had a nice continuation of the bullish move above this ABC pattern completion. Now, this is a good example of combining obviously your investor sentiment to have a reading on, okay, the dollar is weak, the equities are strong, we're holding some optimism, having an idea where investors are placing their money and why. And obviously pairing that with the gold market structure confluence with the 4-hour printing new higher highs, and then the 1-hour printing new higher highs over the London session, showing that buyers are pumping up gold for the short term here on the intraday time frames. Now, what I really like about today's trade was that I adapted from wanting to originally buy here for that double bottom, but it never happened, right? It never got the retest. So instead, waited for this ABC pattern completion, and then the double bottom provided a great entry to still profit from this scalp opportunity, knowing that this is my make or break level, and I'm not looking to extend buys through here. So I wanted to have a smaller stop loss. So I waited for the confirmations, combined both my ABC conservative entry style with the double bottom more aggressive style, and ended up profiting right around right before the 9 o'clock new candle, and we ended up getting the continuation move right basically as buyers stepped in at this at my entry point. So it was a very nice trade today, playing a short-term scalp, identifying that I know the higher time frame is bearish, so I'm only looking for a short-term opportunity. And we see that as I move price forward, we started ranging, and we didn't have enough juice to continue. So it was a very good, very good, very good to observe and adapt to the scalp opportunity, knowing that we're not going to extend it or trying to force something that's probably not going to happen based on, based on where we are, and based on having no real fundamental reason for buying other than the short-term optimism.